Hello, this is Jordan. This video is being recorded on the late evening of Tuesday, October 4th, 2022. Thank you so much for joining me. In this video, I'm going to share a couple charts and some observations about the gold stocks, talking about technicals, and in the last week or two, I've been growing more positive towards this sector. If you don't see that publicly, that's been evident in my premium subscriber updates. And even in my weekend update, so before the explosion that we saw on Monday, I was growing a lot more optimistic. So I'm not that surprised, but it is a little surprising the huge gains that we've seen, particularly in the last couple days. But there's a couple charts here that I want to go over, which I think are really significant. And first here, this is just GDX at the top, but then in the middle, we have the advanced decline line in GDX. So that's a cumulative advanced decline line. And at the very bottom, that is a 5-day rate of change. We'll get to that second. But first, going back since 2015, we now have the third most significant positive divergence in GDX. So in other words, the advanced decline line was showing a positive divergence. It in these instances, it made a higher low while the market made a lower low. Now, obviously, the preceding two that we had around the 2016 low and then at the COVID crash, those are a lot more significant because those were those divergences had taken place and had held for a longer period of time. What we've seen recently, that looks to be only for a month or so, but nevertheless still significant. So, those are the two most significant lows in the last 6+ years, right around the 2016 low and then the COVID crash low. I say most significant given the sustained rebounds that we saw and the huge gains, although they were only sustained for only a period of months, unfortunately. If you're looking at gold, obviously gold, you would say the 2018 low was more significant. But if you're looking at the stocks, the 2020 low was more significant. But anyway, aside from that, my point is we do have the third most significant positive divergence. It's not quite as strong as the other two because of the time that it's has lasted. But look, we're seeing a really good move in the market. And so the positive divergence is bearing some fruit. And it's just important to note that when you get a positive divergence in the advanced decline line, especially around a significant bottom or a significant peak, it's all the more significant. So not to use the word again, but it's very significant, people. Now, down below, looking at the 5-day rate of change. Now, if you look at this going back to 2008 and that bottom, and I'm sure this is the case in many markets, but if you look at the rate of change, over a very short period of time, because you can see GDX has gained 17% in the last 5 days. So going back to 2008, if you look at this, you see spikes to the line there that I drew at 17%. You see spikes to that line or above that line, and you can probably guess where the spikes are. You have a lot of them around 2008. You have some in 2013. Okay, there was a fundamental bear market at that point. But in addition to that, you have lots of those spikes in 2016. You can see they're on the chart. And then, of course, 2020. So this is something that I'm going to talk about this in my next premium update, which I'm working on, which is a flash update, and that's the topic of breadth thrusts. I may have done a video on this in the past, but to really confirm that this is a significant bottom, we want to see lots of spikes in the rate of change, positively over the next week or two or month or so, and at the same time, seeing a breadth thrust in this sector. And again, I'm sorry I'm not sharing this right now because this is premium, but if we look at the most significant breadth thrusts, it's not easy to say when you're recording. They were around the 2016 low and the 2020 low, okay, or just after those lows. So that's going to be something to watch over the next 2-3 weeks or so to see if there's really continued strong buying in this sector or not. And you can, you can still have continued strong buying, and then the market snaps back and does a retest or makes a higher low. I don't think we're going to see a retest, but a higher low is a possibility. I'm getting a little off track, but that's going to help us figure out if this is a real major bottom or if it's just an intermediate bottom. Now, here's a chart of GDXJ because we tend to follow that more than GDX. And you can see, look at that support around 25.26. GDXJ, even so the closing price, I think got down to the 25s. In intraday, it traded as low as the 24s. And going back a couple months, I was looking at 25 to 26 as really strong support, but there's an open gap at 24, so I was looking at that. And, even I want to say like a week or 2 weeks ago, I was talking about, well, this could come down, I'm looking at 24, but this could come down to 22 or 23. And that tends to happen around these major bottoms where people like me, they get too conservative and say, oh, well, it could come down a little bit more. But anyway, my point, aside from that rambling there, my point is look at these support lines around 25 and 26. That's a level where you should see a strong rebound. And that's exactly what we've got. Looking at where this could go, look at the red line. You have obvious resistance there around 36, 37. You have the 200-day moving average at 38. That's coming down. So this rally, if it's going to continue, and I think it probably is, it might have a snapback first. That's a potential upside target. Now, so two more things at the bottom I want to touch on. So at the very bottom, that's another positive divergence. GDXJ against the S&P. Look at all those blue arrows. GDXJ against the S&P. Look what happened around the 2016 low. That was a positive divergence. 2018 low, positive divergence because it was making higher lows in those cases, whereas GDXJ itself made a lower low or at least got really, really close to doing so in 2018. And recently, again, it's a tinier divergence, but it counts. That's the bottom right corner there, that yellow, higher low in GDXJ against the S&P while GDXJ price made a lower low. That's a positive divergence. Now, in the middle there, we have the new 52-week lows. And whether you're looking at it nominally or you're looking at the 10-day moving average, which I like to do, I drew the lines based on the 10-day moving average. Those are all positive divergences where GDXJ made a lower low in those cases, or it came really close to in 2018. And yet, the number of new 52-week lows was much lower than it was previously. So that means that the market made a lower low, but the number of stocks making a new 52-week low got lower and lower. So again, you tend to see these divergences around major turning points. And people, this was, if we're looking there, just in the you look at the far right there this year, look at that blue arrow, look at what's happened in the last couple months. That's a really strong positive divergence where the number of new 52-week lows, that peaked, I think, at the very end of June or early July. When GDXJ was at 30. So in GDXJ kept making lower lows after that. So that's a very strong positive divergence. And so what we're seeing is if those weakest stocks, those really weak stocks were really dragging down GDXJ, all they have to do is just turn around a little bit, and then you get this V bottom, and that's probably what's happening now. So that's where it is. Positive divergences all over the place. Looking at the price, I think it can rally up to 37. There's a confluence of resistance there. As far as, is this the major bottom or what's going to happen after this? That's a topic for another day. Gun to my head, if I had to answer, I do think we've seen the low in gold stocks. I think this bottom is going to hold up for a really long time. So I might change my mind in the future, but I think the balance of the evidence favors that at this point right now. Thank you so much for tuning in, and Leave me a comment. Let me know what you think, and I'll talk to you guys again in the next video.